listening to the Money Monopolizers podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Camunia here, and we are back with episode 70 of the Money Monopolizers podcast. And I'm here with my co-host, Marlon Walls. Marlon, how you doing today, bro?
How I feel to say 70 and get out of the 60s, bro.
I'm happy. We was in the freaking purgatory of the 60s for, it felt like forever, which because, you know, we didn't release an episode every week, which wasn't our fault, but, you know, we back.
Somebody commented on that, like, I hear y'all throwing shade a little bit at that, about that.
Who said that?
I forgot who it was. I know I remember hearing that like a couple of days ago. So it's like, hey, I see you talk calling people out.
I had a couple people reach out to me, that also commented on the fact that, you know, I did throw some shade with that
show. But
hey, I'm just stating the facts because, you know, the people got to know it's not. We always want to release an episode, which is why we're recording right now at 8:51
I was finna say that too. I'm like, bro, if y'all knew how dark it was outside right now.
Like, hey man, come on, you know we stay strapped with the lights.
Yeah, for sure. But no, I've been doing good, bro. I think I can officially say we have finally got the mobile home rented out. Hey. Like if y'all knew how long a process that's been, I don't know if we were even talking about it when we first got it, but man, it's been a long time. Right. But I'm ready to already get the next one now, and I think we're gonna have like stable income for a minute because the dude real chill. Like he not the standard tenant that gives you a lot of problems. Based off like how it's looked so far, he's pretty chill. So I think we're finally done with that. Like trying to get that rented out, and it's not really a tenant. It's gonna be we're doing rent to own where he's gonna be like the prospective buyer as opposed to just a normal tenant, so it's not gonna be all the headaches of like having to fix up any little thing and all that, like fixing up the toilets or something like that. Yeah. So it's like we're the bank more so than a landlord. It's gonna be beautiful. How you doing though?
I'm good. I'm glad that mobile home finally got rented out. That was, I swear, you've been talking about that since episode 34. I don't know, something like that, but it's been a long time. So that's good that you know, you could get that done and completed. But yeah, man, other than that, kind of reflecting on how January went, just because I mean now it's
this is the last day.
Yeah, January 31st. And it was I'm not gonna lie, January felt long. But you know, just kind of reflecting on how the goals I set for that month went. I think I came short on two of them. So one goal I had was to do $10,000 in the cleaning business. Ended the month at I think $8,600 but I should have blew that out the water because I had one cleaner. She had COVID, so she had like 6 cleanings she couldn't do like with regular clients. So that would have been an additional $1,200 something of revenue. So that would have easily put me over that 10K mark. So yeah, I gotta put an asterisk on that. But that was one goal. The other goal was to do 20,000 in the truck. And I think my driver's dropping off a load. It doesn't matter because tomorrow's February. So ended the month with 18,074. So ended up short on that. But again, I guess technically you could always make an excuse, and I don't want to make an excuse. But the driver went home multiple times back. He went back home to Houston multiple times as opposed to because something came up. So, you know, we should have easily did 25,000 if he stuck to the normal schedule. It would have easily been 25. So, you know, came up short. And then this week was brutal, man, with the repairs. Just I swear in the last 4 or 5 days, this week alone, I had $3,500 of repairs in the truck, man. And it's like last week I had $400 because we got the PM, which is just the oil change. Oil change on that truck, by the way, is $390. So
whatever's for a normal car, just multiply it by like 4 or 5.
Easy. Had a electrical cable, I think, get snipped or somehow it broke on the trailer. That was $473 to replace. Electrical cable. Just a small cable, like a 10-minute fix, if that. 473 because you had to get a roadside to come out there. Then had a tire blowout and a wheel the very next day, and it was completely. The wheel literally exploded, and the tire in the rim was rolling on the ground while after the wheel blew up, so the rim got bent up. Had to call roadside to come fix that.
Roadside was busy.
And this is all different companies because at this point you're in different places in the country, so you just got to find a roadside company somewhere. Which I'm trying to get better at that. That was $1,850 to get that fixed. $1,850, not $18.50. So that sucked. And then literally, not even 24 hours later, it happens again. Same exact wheel, same exact tire. At this point, I'm like, okay, either they scrubbed me on this previous repair and they didn't do it right, and they just, put lipstick on a pig to get my money and get the truck off on the road.
You said $1,850 and it messed up the next day.
Within 24 hours. So obviously something is wrong. It's not we didn't just hit a pothole or something. He didn't hit a pothole 2 times in a row, and this happened, right? On the same wheel. Come on. So turns out the axle was actually split, and it was so sharp that I think it punctured the tire twice. So that happened again. That was, how much was that? I think $1,200 to get fixed, the axle that time, and then had to put a new tire on there again because the tire got destroyed, the one that just got put on there. So that was another $1,200. And then I'm not done. So that was that day. And then yesterday, the trailer, he sent me a picture of the trailer tire, and it was just completely worn down. Those tires get worn, and the tread gets worn down, and it was like no tread. It's like he was driving on a flat
on a bald tire.
Yeah, and it got so bald that it was like splitting. The tire was literally splitting. So it was the trailer tire. So had to get that replaced. $473. So I didn't even add that to my expense sheet. So that was actually going to put me at about $4,000 in repairs for just that 1 week. So that being said, that was a freaking week from hell in this week. But I tell you what, I got so tired of seeing this dude's name
pop up on your phone.
Because I know every time it did, I knew I was gonna have to write a check or transfer some money every single time.
He wasn't calling to say hi.
Man, come on. Nobody calls me to say hi. And that's what I was talking about earlier. Anytime someone is in my phone, they asking for money or they asking for my time.
For sure. But this is like really good to be transparent, just showing you like there's highs and there's lows in business. Like you had your best week, but at the same time you had one of your worst weeks as far as expenses. But this is all cost of doing business. But I think the biggest thing about it is that you haven't quit more than anything else. Like just because of the fact that you're still pushing forward, like you weather those storms, you have lessons that you can teach people now. People can learn from your experiences, and they can learn to check axles now instead of just throwing another wheel on top of it, and hoping that's the problem. Like you can always gain a lesson from any type of quote unquote failure that you go through. So I think, and the biggest thing for you, like I said, is that you continue pushing forward because you might be able to get another truck just because of the fact that you keep going.
Yeah, man, that's 100%. That's one thing I'm telling you that business is teaching me, man. It's just how to be okay with bad stuff, stupid stuff happening, man. It's because it's inevitable.
Matter of fact, that just reminded me. I just really wanted to talk about that story. It's about to be story time instead of our topic today. But the guy who sells us the shirts for Money Monopolizers, he runs the whole shirt business, like the whole screen printing business. And I'm telling you that this dude is always, always, always busy. But his perspective and like how his demeanor, like when you see him in person, you would never know that he's like going through all of this at one time. Like he juggles it better than anybody I've ever seen. Like he's on the phone, on the computer, and talking to the person that's at the register at the same time. and it's just like calm with it. I'm like, bro, you've been doing this for a while to be comfortable enough to have all these things coming at you at once and still be willing and still like a smile on your face. Like I would be going insane if I was doing what he was doing, because he'd be there from like 9 a.m. to freaking 1 a.m. some days. I'm like, yo, that's wild. But I mean, you can learn something from anybody. It's like you can learn the art of like being like calm or like just chill in any given moment. Nothing can phase you. I'm like, that's a good quality to have.
And that's a really good point. Well, I mean, to comment on that, he should definitely outsource.
No,
something.
He's definitely a self-employed trying to run a business at the same time.
Yeah, he's the technician.
Yes, he's a technician turned business owner. Like he had literally the exact comment that you see in the Rich Dad Poor Dad. If I stop, and none of these other things, all of my employees are going to just let it go to trash. Like he's like, nobody can do it better than me. I'm like, that's definitely a self-employed mentality.
Delegation by abdication.
Right. So all that stuff, I'm like, bro, if he I don't know, he got to find somebody who can replace him though, definitely. But it just, you still learn from him that art of being calm in situations like that.
And that's a good point, man. I think I call that level-headedness, just in regards to like nothing can phase you. That's what I want to get to, especially, and I think that's a really good masculinity trait too, just in terms of, for men, anybody, but especially for men too, because as a leader of a business or a family, you got to learn how to stay level-headed no matter what, no matter if things are good, no matter if things are bad. Like, don't let things phase you. And that's what I am, man, January, I probably learned more of that in January than I learned for a lot of years of my life. It's going to get to a point where it's like, oh, tire blew out. Oh,
okay, fix it. Like nothing's gonna phase you. I think that's one of the best things that being a business owner can teach you, because you're gonna see everything. If you feel like the ringleader of the bit of whatever's going on, like everybody's gonna come to you. You're gonna see everything that's happening in the business, and you gotta learn how to deal with situations all the time. So you're gonna become great at it. It's like shooting free throws. Like the more you do it, the better you're gonna get at it.
Facts, man. 100%. It's growth, man. I'm grateful, man, obviously, to be going through this at, we're 24 years old. So to have these lessons now, learn how to handle this stuff now is going to pay a lot of dividends when we're a lot older, with families, with kids, relationships, all those kind of things. Is going to help a lot in those aspects. So, man, I'm grateful it's like Romans 5:12. You say, be thankful for times of, distress, because those develop your faith. So that was what they were talking about in church today. So that's the perspective I'm trying to have with it, man. It's just understanding that everything that happens is, I can learn a lesson. It's so hard in that moment because I don't care about the
right. Like, man, F this lesson.
I just want to get this fixed and make money. Mm-hmm. But it don't work like that. Financial freedom is simple, but it's not easy. So anyways, that being said, let us get into today's episode.
Wait a minute. Y'all, man, we've been doing this podcast for about 2 years, but it's time to take it to the next level. Right now, as of today, we have around 117 ratings and reviews, but we're getting about 1,000 listeners a week. So that means a majority of y'all listening right now have not yet rated this podcast. If you are someone that hasn't yet rated this podcast, please take 5 seconds, scroll to the bottom, and drop a rating and a review for us. We would appreciate it tremendously. In order to get higher on the Apple Podcast charts, which is the #1 charts for podcasts, that's the only way we could do it. We should easily get this podcast to 200 ratings and reviews by the end of February. But I'm no fool. I know how people work. I know we're incentive-based creatures. So that being said, what I'm going to do is, if you leave a rating and review for this podcast, screenshot it and send it to the Money Monopolizers Instagram page DMs, I will enter you into a drawing to receive a copy of my How to Acquire Your First Flip or Rental Property Real Estate course. Over 8 hours of content walking you through how to find deals, how to analyze deals, how to finance deals, how to put a team together, how to buy deals with none of your own money, how to raise money. All of that stuff is included in my course. Think about that return on investment. For 5 seconds, you get a chance to win the course that can help you acquire your first property. But if that's still not good enough for you, we also gonna throw in a free Money Monopolizers t-shirt. We got the black, the white, and the gray, long sleeve or short sleeve. You get to pick. We'll send it right to your crib. If you're listening on Spotify, you can get in on it too. All you got to do is get on iTunes, search the podcast Money Monopolizers, and leave a rating from iTunes. There y'all have it. Simple enough. Let's get this to 200 ratings and reviews by the end of February 2021. Let's go.
Today, we wanted to talk about something where we kind of, I know Marlon, you have put a poll on Instagram kind of talking about asking the people what things they wanted to learn more about. And one of the things that you saw was people mentioning that they wanted to learn more about allocation between investments, retirement, and just general, budgeting and that kind of stuff in general. So that's what we kind of want to dive into today, in regards to kind of how people can do that, how we do that, and our take on that in regards to financial freedom, which, because at the end of the day, Money Monopolizers, we are all about financial freedom. Fire your employer, sell anything except your time. 9-to-5 slavery is the worst thing. I have so many sayings, what's going on? If you watch me on YouTube, I say them all the time. So, this is just, obviously everything is always going to relate back to financial freedom. So when you ask me about a 401k, I'm gonna tell you my take on a 401k, and y'all are gonna get that in today's episode. So
For sure.
I know a lot of people not clown me, but a lot of people, they give me some heat about that, but I don't care. I got my opinion. So anyways, that's what I want to get into. So I know, I want you to kind of like kick it off just in regards to kind of what you think in regards to, so the overall concept or overall question of what we're talking about is allocation between investments, retirement, 401ks, and how you are budgeting your money overall.
For sure. I think just in general, just the question alone just makes me happy to hear, or just happy to see when I saw it, because that means that people at least have the mindset of saying, I need to do something better with my money than what I've been doing. And it's telling you that you're working towards creating a plan for your money. And I know one thing that we always heard, and I always say all the time now, is like, if you don't have a plan for your money's going to have a plan for you. And what you don't want to have happen is your money having a plan for you, where you're just going through life and spending all you make and not really ever paying attention to your nest egg, your money that's grown, that needs to be growing on the side, or to create some type of generational wealth for yourself, for your kids, for your kids. Like, that's not the life you want. I don't want to live a mediocre life by any means. And that's what happens if you don't ever have a plan for your money. So I think just by seeing that that question just really like made me want to maybe want to answer it in general here on the podcast. So I would say, as far as just, I think it's just very important that you have some type of plan where whether it's either your 401k, whether you're doing like an outside brokerage account, an IRA, just starting off with identifying what's going to work for you. It's really going to be all dictated by what your end goal is. So if you're looking to retire at age 59 and a half, at age 65 or whatever, then 401k may be for you. I would say, like Alex mentioned, since this is a financial freedom podcast, we may not touch so much on that because
I'll give my opinion.
Right, he's gonna give his opinion, but that's not gonna be our main advice at the same time, because we're trying to our forte is financial freedom. So we're going to really dive much more deeper into a financial freedom route of how to allocate your money.
Yeah, and I think, generally, I think you covered a lot of it. I think that, to me, when it comes to allocation of funds, right? Allocation of money, knowing, what you want, what you're moving toward, what you want your life to look like is the only way you can actually begin this. Because if I tell you to, allocate your money a certain way, like, I can give you advice. Generally speaking, I can always give you advice, but my advice is useless to you if it's not going to be reflective of what you want in life, right? Exactly. I could very much tell you to, go max your employer's 401k, go max out your Roth IRA, go max out, your, whatever, go max out any of these paper assets. And if you're trying to, achieve financial freedom in 5 years, I'm giving you trash advice. Like, that advice is not applicable to you. So, before we even give what our takes are, and I just want you to understand, I want you to think about, what do you want your life to look like, right? What are your goals in life? We talked about that in the last episode in terms of setting goals. Go listen to that one, episode 69, if you want to kind of figure out how we set goals and determine what we want our life to look like and what we want out of life. And so that's you have to take our advice or our what we say based on and apply it based on your life, right? So when I talk about the 401k, that's not applicable. My opinion is not applicable to everyone because what I want is not the same thing as what everyone that's listening to us wants. Mm-hmm. So, when it comes to the whole conversation of just budgeting in general, I think that a lot of people are just drifting while they're budgeting, right? They're not really in control of their finances because they don't really have a reason for what they're doing, right? You don't have a reason for budgeting. It just goes back to what I was just talking about, having a goal, right? And it all is all intertwined because, you need to have a purpose or a goal in order to actually budget or do any allocations, right? So if it's to pay off debt, if it's to save to invest, if it's save to start a business, if it's just to save an emergency fund, right? Whatever that goal is going to help you determine what your allocation should be. So you need to, number one, know that. Like all this advice, there's no advice that's going to be monolithic, right? It's not going to apply to everyone. So when you have that purpose, it's going to motivate you to actually follow through with those allocations, right? And generally speaking, you're going to always be accounting for every one of your dollars, right? If you have that purpose behind what you're doing, because, when it comes to the accounting for actually your dollars, when you don't have a purpose or a reason, then, what's going to happen is you're going to, and this is just general advice, but when you don't have a purpose or a reason which you're budgeting, most people will spend money and then they're going to look a few weeks later and not even know what they spent money on.
Yep.
Right. You're just spending money. Like, and I'll just say me, for instance, like today I went to brunch with a couple other people and the way I distribute my money in my personal funds is I'm very strict on my budget as far as how much I want to spend, just generally speaking, on like miscellaneous stuff. I'm a lot more loose between like groceries and stuff. That's a little more flexible. When it comes to miscellaneous, like it's to the point where it's like I have to transfer money when I go out to out for fun or anything. I have to transfer money from one account to another account because if I give him my card, it's gonna get declined because I keep that account at literally nothing. So, and that's what happened today. I had side note, but I went out for brunch and had like a $42 bill. I was pissed, but I gave the lady my card. I said, hold on, don't charge that yet because I gotta transfer the money. And she thought I was like just like making a joke. I'm like, yo, I'm serious. Don't charge that. And she ended up charging. She came back. She was like,
you got declined.
But she said it went through a few minutes later. I was like, I told you not to charge it. So, because I hadn't transferred the money. But anyways, I'm saying that to say it's like my money's allocated. I don't allocate my money into any of the miscellaneous fun stuff up to a certain percentage. So anything that's like extra, I have to transfer because my allocations are that strict.
You're right.
And so that's what I mean by that. It's to the point where it's like, I know if I live according to the budget, I'm not gonna have any money that's just, I don't know what happened to it, because it's either gonna be saved to invest, it's either gonna be put to bills, or it's gonna be put to just like fun money or something, a small portion to that, right? So that's kind of how I do mine personally. And I to me, I mean, what do we call that? A zero sum budget. So you essentially account for every dollar, and then you have that you have $0 after you've accounted for everything. You should have $0 left after every month or after every paycheck. Like all your money goes into one account and it's distributed, and you have nothing left because it all got distributed somewhere. It's not saying you're broke. You allocated it somewhere, so you have nothing that's gonna nothing will happen by chance. It's all defined, right? And so, because most people, what they do is they get paid, they pay their bills, and then they save anything that's left, or they, whatever's left is just I don't know.
That's the miscellaneous spending money.
Yeah. And what happens a few weeks later, you don't know you don't even know what you spent it on. So you got to allocate somewhere. And we obviously it's the pay yourself first mentality. We talk about that too. You get paid, pay yourself first, then you pay all your bills. And then for sure you will have nothing left after you pay those bills. So, but that's just in regards to general budgeting. I can talk about the retirement and investment allocations here in a minute, but
I think the most fundamental thing is to avoid what The Slight Edge, the book by Jeff Olson, what he calls Parkinson's law, which is so if you think of Parkinson's law, it states that work expands to fill the time that's available for its completion. So the example I thought of right away when I read that was like when you go to school and you assign a project that's due 2 months out, and you're like, oh man, I got plenty of time to do that. So you literally procrastinate for a month and 29 days. And then when you have 2 days or 1 day left, it's like, okay, it's time to really like grind down and start getting this project done. You can finish that project in 2 days. You probably will finish it in 2 days, because that's the only time that you have left given to you before the deadline is reached. And the people who apply that same mentality to their money. So if they are given $1,000 for their paycheck, they magically find a way to spend all of that $1,000 for that pay period, and then they have to be given another paycheck. It has nothing to do with the amount that they're given. It's all about their mindset with it. So they're just operating in Parkinson's law. If they were given $10,000, they will find a way to spend that $10,000 within 2 weeks. And that's primarily for people who don't have a purpose for their money. And that's why I think this is what we're talking about so important. So like zero sum budget. I'm actually going to make a spreadsheet on Money Monopolizers. So if y'all go to moneymonopolizers.com/budget, y'all going to find a spreadsheet that's going to allow you to create the zero sum budget for yourself. So if you're looking to like allocate every last dollar, so whether you're saving, whether you're tithing, whether you're putting money towards groceries, all that's going to be laid out in this spreadsheet from A to Z. You'll be able to download it and you'll be able to really physically see where your money is going. So now next time you get a paycheck, I want y'all to all allocate each and every dollar that you're spending. And so you'll be able to, based on your goal, you'll be able to follow along with us and see where you should, like how much you should be allocating towards certain investments and things of that nature. But I think the ultimate goal is to have the ultimate thing, the ultimate takeaway from what you were just saying is having a plan and having a purpose for your money is going to make you a lot more intentional about where it's going.
Yeah, that's really good. I love the whole Parkinson's law too, because I was actually reading about that too in a book called Profit First. Essentially, because I think of that too, right? So like, if you have any type of extra money, you'll find a way to get it. You'll find a way to spend it. And I think of the Parkinson's law too, with an example of like, because I was thinking in my internship back in a few years ago in school, I had it was like transportation engineering. So pretty much we did a lot of traffic analysis and those kind of things. And one thing that the transportation engineers would talk about was ways to obviously, decrease traffic and traffic jams and those kind of things, right? Because that's what you do. And one thing I always thought about, I was like, man, they never ever suggest just adding more lanes of traffic. That's never an option, right? Because it's gonna get filled up. Like it will. Somehow, someway. If we have a freeway, we have 4 lanes. They expand it to 8. There's gonna be people driving in that far left lane just because. It's gonna happen, right? And so what she would always say, and what the transportation engineers would always say, was we had to figure out how to get people to take public transportation. That was the only way to really. That's the number one way to decrease traffic, is get people on public transportation and not doing single occupant vehicles, pretty much, where it's like one person per car, right? It's going to expand. Like that capacity will get filled. We see it all the time in science. We see it in nature. We see it all the time. So that's good, man. That's real good. And we created a spreadsheet.
I thought about it. It was like episode 2 or 3 where I mentioned that before, but
no, we did one recently. Remember? It was the one like we did it at the end of last year. the zero sum budget. It was the one for the credit card payoff. I'm not gonna say the.
Did I give it to you? Oh yeah. I mean, I'm gonna use the same template. Yeah, for sure.
Yeah, I'm not gonna. Yeah, I didn't want to say the person's name that.
Yeah.
But that we made it for. But it was I had put that in my YouTube video as well. That same spreadsheet. It was on a Google Drive.
Mm-hmm.
But I can probably link it in the description too.
Yeah, I plan on like having a whole blog post about it on Money Monopolizers, so you can really link that.
I mean, if you had that released by this week,
it will be for sure. It ain't. If y'all was able to see this video right now, it wouldn't be up right now. But by the time y'all see it, it'll be up.
All right, it's cool. But yeah, man. So that spreadsheet is real dope because it's gonna allow you to account for everything, whatever your goal is, right? If your goal is to pay off debt, if your goal is to save, if your goal is to, like you said, tithe, it's gonna allow you to pay that first, right? You always pay yourself first. And then if everything else is going to be automatically allocated in order to get you to 0% or $0 left. So that's always the goal, man. So that's dope. So man, there's a couple other ways I want to take this too. I'm trying to figure out if I want to. Okay, let's talk about this, then we'll talk about the whole investments thing. So one thing that I was talking about, that book Profit First, right? So profit first, and this goes into how I think this is how I budget too, and this is how I recommend everyone budget. And then we'll get into this will lead into the investment conversation. But the Profit First book is essentially a book that teaches entrepreneurs how to be more profitable in their business, right? And I mean, if you couldn't tell from the title, the number one way to be more profitable is by changing the accounting equation from income minus expenses equals profit to income minus profit equals expenses, right? So you take your profit first and the remaining is what you need to work with. Like that means you have to be, it's going to force you to become more efficient, right? Because now you have to decrease your expenses, right? Because now and I don't want to get too deep in it, but it's pretty much like, okay, you get a big plate. It's like, okay, think about Thanksgiving. Nobody goes, when we have Thanksgiving dinner, we don't all eat off of one plate. Everybody gets individual plates and we put food on the plates, right? It's the same thing. You get money coming in, you take your individual stuff, which is your profit, right? And then the rest is going to go to your expenses. But the thing is, in the book, they say you get money coming in, you take your profit, you take your owner's compensation, you put away money for taxes, and then you put away money for the rest is going to be your expenses. So you have to be profitable that way, right? But I mean, people still fail because what they'll do is just take money from their profit and then just put it into their expenses. Right. So you kind of defeat the purpose when you do that. The purpose is to force you to be more efficient. And that's the same thing you should be doing in your personal life, right? It's the same thing with a business. This is how I operate now. All my businesses. So all my businesses have 6 bank accounts, each of them. And it sounds absurd. And trust me, when I first read it, I was like, that's insane. But I did it, and I've been doing it pretty much since the beginning of January. And now I've paid myself for the first time out of any of my businesses, any time in my life ever. So
congratulations for you. That sounds big coming from you, for real.
No, it's huge. Exactly. And it was not even a big amount, because the thing is, it's not like you don't start off huge. Okay, yeah, I'll pay myself, 70%, whatever. No, you start off with a small amount. And it obviously is based off your biggest business goals. My goal is not to pay myself based off of what I'm making now. My goal is to be paying myself based off what I'm making in a few years, right? So I want that piece of pie. But you had to start that foundation now. You had to start that principle now and get accustomed to taking your profit, because what's going to happen, or your owner's comp, right? It's different. You have your profit, you got your owner's compensation. So I take both of those now, because what's going to happen is, if you don't, you're going to grow your business really large. And I'm going to relate this back to the personal, but you're going to grow your business really large, and your expenses will grow really large too. And you never became efficient. So you got to learn how to become efficient early on, right? So it's best to do that right off the bat and learn how to operate your business on less and be more efficient so that you can pay yourself, because you need to be paying yourself. That's what I realized. I was like, I'm a fool for not paying myself anything from my business. Like, I'm doing all this, work to build this business, and I'm not getting anything. So now 2 weeks in a row now, I've paid myself, and it's a small amount, but honestly, I just realized, like, this is what's going to make me financially free, is paying myself first for my business. Because before I was just hoping, I'm going to make enough money and then eventually I'll just take some of that money and pay it to myself. But it's like, dude, you build it up slowly. So now by the end of the year, my income from my business's projections will be equivalent to my 9 to 5. And that's going to essentially allow me to, leave my job if I feel like I want to do that, because I started taking my payment first. I really want to keep going on it, but I want to relate it back to the personal aspect, right? And it's the same thing. So I have my 6 bank accounts in my business, right? I got my income, I got my profit, I got my owner's comp, I got my taxes, and I got my expenses, and I had one more. I forgot. I have one more, but my payroll. So the payroll account. So that's to pay your employees. But so the same thing
about that last, like, dang, I got
yeah. So, but you do the same thing with your personal life. You have multiple bank accounts. I don't need 6, but the goal is to have multiple. And I realized, I was like, wait, I've been doing this because that's what I've always done, right? I have my money that comes in, and you get your allocations. I have my bills, I have my savings to invest, and I got my fund money account. Mm-hmm. So now, I mean, that's essentially, I was already doing that, but I never really knew like it was a thing that's like a structured thing that people were actually teaching. And that's what I recommend everyone for. That's what I recommend everyone do in regards to allocating your money. You get your money coming in into one account, have an income account, and then you disperse it from your income account and allocate it based off of that, right? And so you have one big plate, the Thanksgiving, and you give everybody servings.
I love that for one, just because of the fact that one, I think that puts the budget or the zero sum budget spreadsheet into like true application. So everything that like, if you have like 4 different sectors that you're focusing on, and on the budget spreadsheet, it could be investments, it could be savings, it could be fund money, and then it can be bills. You have all 4 of those pots, or all 4 of those allocations that you were focused on the budget spreadsheet, and now you have 4 accounts to see it in like real time. So now the budget spreadsheet said to put $500 into bills, and then you here you are with your bills account, like a bank account, put 500 in. That's like straight up straight transfer application. Yeah. So I think that makes it very realistic at that point. So I think that'd be perfect, like just to as a for application basis, like to use that spreadsheet and then see it like manifest into real life. But then other than that, I think this really helps build a habit. I think the habit is more important than any financial goal that you can have. So you may have a goal to save money this year. I think the real goal should be just to like find a number that you want to save per paycheck and just focus on that. So like, for instance, if you want to save $100 per paycheck, I think I put a post about this, that just doing that establishes a habit of putting money away before you pay any bills, before you pay anything else. That's paying yourself first. I know for a fact I'm gonna pay myself this amount before I touch any of the money, because I know the importance of building habits. So no, that's what it was. When you had said that for your business, that's what it made me think about this, because you're practicing early. The amount does not matter how much you're putting away, but it's the fact that you built the habit early on. So by the time you get to the point where you're making a whole bunch of money in your business, you make $200,000 a month. Like if you're making that amount, or 2,000, however much it is, you are used to putting away some for yourself. And I think just building that habit right now that's building the foundation. So that way, when you get there, it doesn't feel like it's going to be foreign to you. It's going to be natural.
Yes, man. Yeah. The habit is the most important thing. It's because, and it can be like, because I know a lot of people, if you're hearing this and you have a lot of expenses too, you could be like, man, I can't pay myself. I can't save anything. I hardly have anything I hardly have anything after I pay my bills. How am I going to just create money out of thin air in order to start saving, or whatever the case may be? Now it's like, dude, you can find a way to take 2% out of your expenses and put towards paying into savings, right? You can find a way. It's the same way with business. You learn how to run a business more efficiently. You need to learn how to run your life more efficiently too. Take 2%, right? And then what happens is, after, let's say, a quarter of the year, increase it to 4%, right? And then another quarter, you increase to 6 or 10, right? And then you gradually increase it. You cannot just instantly go and take 20% because what's going to happen is you're going to have to just pull from that account immediately because you haven't learned how to run your business on less yet. So you have to, or your life in this aspect, right? So you have to learn how to do that. So that's what the habit is going to do. You do a small amount, you take that, whatever. It's not about the amount. It's just about the habit. If it's $10 that you're getting saved now, that's $10 more than you had before. I mean, you're broke, but that's $10 more than you had before.
What you was just saying about the percentages, though, that's a core wealth principle in The Richest Man in Babylon. So, like he listed out literally core wealth principles that all the wealthy start off with. And he talks about just the saving allocation. What he recommended was 10%. He said take 1/10 of every paycheck and put it of all of your earnings and put it towards your personal self. Pay yourself with that, whether it's savings, whether it's investments. That money must go to yourself. And what you have to do is just learn to really identify where you're spending all of your 100% at right now, because you need to find a way to get 10% to yourself. So something's going to have to be sacrificed. It could be you may have so many subscription accounts, for instance, that you may not even be using, but you really need to. That's why the zero sum budget is so important, so you can identify where all your money has been going, and that way you can learn how to take some from that 100 and put 10% of that into your savings and investments. And I think that core fundamental principle is just like that's the foundation of how people begin to build wealth, because more times than not, the reason you're not building wealth is because you're spending all that you make every time. If you just saved a little bit, you will amass a large portfolio over time. But people are just I think they're just daunted by how much they need to save. And I think that's why we go back to the habit. Just building the habit alone will allow you to start building that nest egg and start building that pot that you need, that savings pot over time. And once you get into the habit, it becomes easier over time.
Yeah, man, 100%. And this is literally what we started doing in 2018 when we wanted to buy our first properties, right? And that's how. What do we save? $12,000 in 6 months.
Depending on how fast you want to, how gun ho you are about achieving your financial goals, that will be how much you start saving. So you pretty much eliminate all extra expenses and only keep the essentials like bills. Because for us, I was saving 50, 60, 70% of my income.
Bro, 100%, man. We was putting $1,000 away per check, and it was it was between 700 to 1,000 most of the time. So, but it's because it was anything else was no. Yeah, we need to get these property. That first property was all that mattered. So, anyways, I think that's a good segue into kind of the whole investment, right, part of it, and what I wanted to talk about in that regard, right? So, the question that was posed was how much should be allocated towards investments and retirement, 401ks, those kind of things. But I wanted us to talk about that general budgeting aspect because people needed to hear that. But in regards to the investment allocation with retirement, 401ks, that kind of stuff. Look, number one, the first thing, like I said, what doesn't change is that you need to know what your goal is, right? When we saved $12,000 in 6 months, it's because our goal was to become financially free, right? I was not putting goal, yes, meaning I didn't put a dime into my 401k. Not one penny went into that. I'm not gonna say my employer's name. Not one penny went into that 401k account, right? And I would talk to my coworkers and tell them this, and they would just look at me like I was just crazy. Or it's it was the first year, so they're probably oh, this dumb kid doesn't know about anything with money. And it's bro, anyway, I'm let me not say what I was thinking, but I was saying that to say is that was the goal. The reason I did not, and the reason I do not put money in my 401k is primarily because I cannot touch that money until age 59 and a half. And so if my goal is to be financially free by age 28, what good is my money sitting in an account that I can't touch until I'm 60 years old? Make it make sense. What am I going to do with that? It's growing, it's compounding, but I can't touch it, at least the earnings, until I'm 59 and a half. So my whole thing is, why not take that money and put it towards something that will get me my financial freedom, right? And if I want to pull that money out, I'm going to pay the taxes on it, and I'm going to pay the 10% penalty. That's not aligned with me. In order to have things that other people can't have, I have to do things that other people won't do, right? Most 99.99% of people aren't retiring at age 28, right? Those that are didn't put money in a 401k to retire. They started a business, they bought real estate, they bought dividend paying stocks, they bought things that pay income. So that's what I'm doing. I buy things that pay income, right? And so I know the argument I always hear is, that's free money. You're missing out on the free money. The tax benefits. Bro. The tax benefits that people get from a 401k, you talking about you get to, write off that amount that you've contributed into the next year's taxes, right? Bro, the depreciation I get off my properties alone doesn't let me pay anything in taxes. I make more money than what your retirement account is going to pay you off of my property cash flow from my properties, and I don't pay any taxes on it because of the depreciation from it, bro. And so my whole thing is, I don't need a 401k, and I don't need an employer's match to give me anything in order for me to get financial freedom, right? That's not going to help me retire at age 28. I need a business. I need real estate. What's going to give me cash flow every single month? What's going to pay me $50,000 a month? Is my 401k going to pay me that? Hold on.
Go ahead.
Is my 401k going to pay me that? No, they're not. So for me, when people tell me that's crazy, it's like, dude, you're the fool. But the people that come at me telling me what I should be doing, tell me that when I'm retired in another country, relaxing, making money in my sleep while you're still at work. Tell me that I'm a fool. Tell me that when I'm 60 years old and I have real estate worth 10 million, 50 million, $100 million. Tell me that when I'm 90 years old and my kids have a business that is paying them $100,000 a month in real estate that's worth $1 billion. Tell me that at that point. until you could tell me that the 401k is going to help me get that, I don't want to hear it. So I'm off my soapbox onto the 401k.
Right. No, I just thought about it. Go listen to episode 68 if y'all haven't already. Listen to how much tax write-offs our guest was able to get based off his one hotel alone. Like I'm not even gonna spoil it for you. If you ain't heard episode 68,
no,
just go
tell
listen
him.
to it.
He got $700,000.
$700,000.
K1.
Yes. $700,000 off one hotel, bro.
Is a 401k gonna give me a $700,000 tax write-off?
Like there's tax write-offs in multiple streams besides just the 401k, so I can see that for sure. Now I will say, for the average person, if y'all are on this Money Monopolizers podcast listening to financial freedom people for general retirement at age 59 and a half advice,
wrong place.
Then for once, the wrong place. But if you are here, I would say, if your goal is to live lavishly after 60, then go ahead and max out your 401k. But like I said, you're probably you're on the wrong podcast anyway. But if your goal is early retirement, then yeah, it depends on how soon are you looking to retire. If you're looking to retire within the next 5 years, you need to have the majority, if not all of your money working for you in a vehicle where you'll be able to access it as soon as possible. And so that could be real estate, that can be the stock market, that can be any type of investment that's going to get you a sizable return on your money, and it's going to grow you to a point where you can achieve financial freedom, meaning that you're going to have enough cash flow to supplement your lifestyle without you having to go work anymore in your life. So that's really just the gist of what Alex is trying to get to.
Yeah, I mean, I just you know how I say.
But that's a very much passion topic right there. So you're gonna get some passion out of that question. So we really gave our examples already. It's like for me right now, for instance, my goal is still to achieve financial freedom for myself by age 30.
Marlon, wait,
I think it can happen much sooner than that. What?
do you put money in 401k?
It still goes there. Yes, it does. I plan on doing what's called the rough conversion ladder, which I learned from Our Rich Journey. We had them on episode 37, I think it was. Go check them out because I plan that as well. So if I'm not even going to talk on that because I can't express it. I haven't studied it enough to be able to tell somebody just by teaching and be able to teach it to somebody. But that's my plan on it, on using the 401k in general. And Alice is over here just laughing like, "Dang, you really do that? Dang, you sucker." That's all I hear him saying.
I mean, look, teach their own.
For sure. But I would say one reason that I do is like if you don't have a true plan for what you're gonna use your money for, I think you need to at least be putting it somewhere. Like the last place I want to put my money is a savings account. That's the way you feel about 401k is how I feel about a savings account. You're not getting no.
I feel the same way about savings.
Right. I'm as passionate as you was about the 401k is the same amount of passion I have about a savings account. Okay. My savings account is about to be at 0 now. Because I've been looking at just the way I've been looking at it lately, especially me and my dad been going back and forth and like, bro, Apple, like I think we were looking at Apple alone last year and the percentage that they went up. Because I had like $2,000 invested into Apple in 2020. I think I had like now 2020 is an anomaly, of course, but they still made like I want to say that money itself made like a 15% return on my money. And so that was $2,000 that turned into like $150, I think it was. And I look into my savings account and it got like, I think a grand total of $1.54. And I'm like, yo, that's right. I'm not putting no more money to my savings account. Everything else is going toward either going to be in the market, going to be in a money market account, anything other than a savings account, because I want my money to be growing if it's not doing anything else. Right now, my money is really there to grow for the house purchase. And like that's why I said it's good to have that goal in mind. Like if you're looking to start a business, I think it's very important to understand or to figure out how much that business is going to cost to get started up. Figure out a number like that, and then make that your goal number to get to. So if your business is going to take $2,000 to get to, figure out, pretty much you start with the end in mind. You have the numerical amount that you need to start the business. Now backtrack and figure out how fast do you want to get there. If you want to get there in 5 weeks, that means you need to be saving $400 each week and do it that way. I will having $400 put into a pot that's going to be for that investment. If your goal is 10,000 or 20,000, it's the same thing. The same principles apply. And I think that's really like how you should start allocating. If you're looking to start a business with your money that you're putting away, then you start splitting into different pots. Like that's what the zero-sum budget is for. If you want to have an emergency fund, have allocations for that. If the emergency fund is $1,000 and you want to save that within 10 months, I'll say within 10 weeks, you're putting away $1,000 a week, or what was $100 a week. I mean, and that's really a way to go about like building up your portfolio of different pots that you have that you're allocating towards.
Yeah, I think that's good. Man, I'm still caught up on the fact that you put money in your 401k. No, I'm playing. But to me, it's. I mean, yeah. At the end of the day, that's the thing about it. It's like you got to have a plan for money, man. Cash is trash. Savings is trash. I mean, obviously to me, 401k is trash. My money, it has to go somewhere. As soon as I get it, I'm trying to find a way to get rid of it. It's something that, the thing is, you got to be putting it into something that's at least beating inflation. All right. So if inflation is 1.5%, you need to be putting into something that's at least getting you 1.5%. So your savings, if you are new to us, savers are losers in 2021 and beyond. They've always, really since probably like the 2000s, savers has been losers. But you need to find somewhere, which even if you're putting it in a CD, heck, that's to me an inflation protection, an inflation hedge, because at least you'll be getting, you won't be losing money. You won't make money, but you won't be losing money. So just finding a way, if you don't know what you should be doing with your money, like if you're making money and you're putting it in savings, man, you need to find something that you're gonna do. If you're gonna start a business, start that business. If you're gonna buy real estate, buy that real estate. If you're gonna invest in stocks, please start researching stocks, because as time goes on, man, anyone that has cash, I really believe we're gonna get to a point where it's like fiat money is gonna be useless. Obviously, we see people's money, right? Cryptocurrency. We see Bitcoin, Dogecoin, Litecoin, all these cryptocurrencies that are taking off because this is people's money. The government can't interfere with it. So this is now like what we're moving to in the information age. This is what I'm be saying. People, y'all got to wake up and see what's happening. Like, stuff is happening. And if you don't notice, you're going to wake up, you're going to be 60 years old, and your 401k ain't going to have nothing. And, it's people, you think that's like a drastic thing, but keep doing the same old thing that people been doing since the 60s. You're going to be in for a rough awakening once, we get to a point where people our age in 40 years, when we're 60, it's going to be a lot of people SOL. It's going to be a lot of people SOL. The world is changing and people aren't adapting. So anyways, that's my take with that. I think the last thing that I wanted to kind of talk about before we wrap this up, I know that, it was the investment, the retirement account. So yeah, as far as the allocation for actually like those percentages. So let's say you are a 9-to-5 guy and you want to, retire when you are 65, Lord bless your soul. But I think, you should be contributing the max to that 401k account. I mean, if that's what you want to do, that's something that, I would encourage you. That's the allocation you should be putting to that, right? Because, you can make your arguments for that. Now, if you don't necessarily want to do that, but you still want to, allocate money towards even paper assets, like stock market or that kind of stuff, as far as the percentages, you need to, like I said before, figure out how you can decrease expenses in other areas and maximize the investments. The percentage that you should allocate is the max percentage that you can possibly allocate into your investments. So if that's 10%, that's 10%. If that's 11, 12, whatever, I can't tell you should be doing 15, you should be doing whatever. It's the max that you can possibly do. You need to be putting that money somewhere. Because where else is that money going? You're either burning it or you're investing it. That's the only two options. You're either spending it or you're letting it grow. So that's my advice in that regard. You can call it advice. I'm not a financial advisor. We're not financial advisors.
Please put that in there.
So, whatever we say, you do at your own risk. But this is just how I operate my life, how, I look at how I want my life to be. So that being said, man, that was pretty much everything I wanted to get into. Was there anything that you wanted to get into before we wrapped up?
I mean, the way you ended it up is pretty much what I would have said as well. Like, if you're looking to retire that late, I would just max it. I mean, if you want to retire that late and live lavishly later on, max it on out. Like, that'll be the best advice I have for you, because that's going to be what's taking care of you in the future if you're not buying no investments along the way. So
yeah, debatable.
I mean, if you ain't got nothing else, what you got to rely on besides that?
You'll be living on minimum wage when you're 65.
Yep.
401k. You'll work until, actually, you won't ever retire, by the way. You'll work until you die. You will. You'll work until you die.
So I believe that is 100%. But like I said, if you are looking to achieve financial freedom, I think the main thing is to allocate, like Alex says, as much as you can towards what's going to help you get that financial freedom, whether that's going to be your businesses, whether that's going to be stock market, real estate, as much as you can get a little uncomfortable with it, I think, as well. That's going to be a really important thing. Like, you may have to, I know me and Alex joke about it all the time, how we used to live off ramen, pizza rolls, and potatoes. Like, get a little uncomfortable with it, because like, you're investing in your future and just practicing delayed gratification for something that's going to be much better in the future. So it's going to be funny to laugh at those stories later when you are living the life that you want to live.
100%. I mean, I wouldn't ever eat ramen.
That was me. I'm the ramen pizza rolls. He's the potatoes and bread.
Yeah, I had to eat at least something that was out the ground. That stuff was messy. That ramen would destroy your stomach, boy.
My stomach a soldier now after all that.
Better be. But yeah, man. Other than that, I think that's really everything we wanted to hit on. I hope y'all understood everything we're talking about, and definitely hit like in the description for that zero sum budget spreadsheet. Anyways, that's it for this episode of the Money Monopolizers podcast. New episodes will be released every Thursday and will be available on Apple Podcasts, Spotify, and YouTube. Just search Money Monopolizers wherever you listen to podcasts. We hope you learned something of value today. If you did, we'd appreciate it if you rated us 5 stars and left us a review on Apple Podcasts. You can find out more info about us on Instagram at Money Monopolizers or on Twitter at the Monopolizers. Check out the YouTube channel. Posting videos on there once to twice a week. I'm trying as much as I can. Very hard to consistently put 2 videos a week. I'm not gonna lie. 2 videos is very hard. I might have to jump down to 1. But anyways, you could go check that out. I'm putting a lot of effort into those, so hopefully you're getting a lot of value out of those. But other than that, man,
are you looking at me for more? We post informative content on it that'll keep you engaged. So check that out and share those posts. But until then, we out of here.
There you got it. Hey, man, I'm out of it.
You've been listening to the Money Monopolizers podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take